S&P rallies clearing another minor resistance level. Nasdaq Futures closing at a new 30-day high. The dollar and VIX continue to plummet. U.S. Treasuries continue to rally as yields fall. NVIDIA makes another new closing high. What do Tesla and Meta have in common? Carvana breaks out. We'll tell you what to look for. Affirm clearing a major hurdle. Why TLRY and the other pot stocks exploded today, and which one you want to watch. Netflix clearing a major hurdle. Non-farm payrolls and PCE prices were released today, as well as GDP. We'll talk about what this means, as well as what economic data you must watch tomorrow. We have a ton to go over. Let's get to it. Hey, everybody. Welcome back. So we can see the level right here. There's 45.24. It's a good day. We're going to get into what actually was the driver. This is pretty clear stuff. We talked about this on Saturday, how we have this control bar that's in control. And the one thing that we did not want was 1, 2, 3 on the way up, and then getting to the top of that control bar and then kind of plummeting back down, which is a very distinct pattern and something that you could see happen. Instead, you pretty much have what you would want if you're bullish. Now, we're clearing other hurdles right now, and we're starting to work our way up, and we need to talk about that and what to look for and why it's happening. So first and foremost, let's get into the levels that we're starting to clear. So you can see that 45.18 level right here and how we're starting to clear that. All the levels are over here on the right, something just to watch when you see them. And then you just start working your way up. But the question is, what's really going to get us there? Well, for me, the next really big level is going to be this control bar. And I'll show you why I feel that way, and then we'll drill into this in greater detail. If you look at that control bar, the one thing that has happened here, that broke this trend line. And you can see that trend line pretty clear right here. It's a minor trend line. It's not the be-all, end-all, but it doesn't really get more telling than that. And you can kind of even see that if you were to clone these lines and you just decided to move them over, you might see that they really aren't perfect. Right? You can actually see where you popped out a little bit right here and then you popped back in. So it's not a perfect channel, but it's there. You know, if you pop out in 3 to 5 days, you're back in, you say that it can still go, but nonetheless, you had a break in the channel, which could have led to a really big move, and it didn't. We just reverted back in. All right, so we have this channel, and then we pop out of that channel. Now, when we pop out of the channel, what happens? We don't get that 3 to 5 day back in the channel move, do we? We get the exact opposite move. Let's clean all this off for a second, and so we can just focus on this one line that is what we need to focus on now. So I'm going to give you one area to look at tomorrow that is very important for you to watch. 45.37.25. That is the exact number. This is going to, unless I use the magnet, it's not going to be exact. I'm not going to use the magnet. But if you want to watch this level, why? What we did here was we broke. This broke the trend. Once we broke the trend, what happened? Then you started to form this little flag in here. Once you form that flag, you try to get through, broke, we get the doji, doji breaks, tries to rally, and then we just get that 3 black crow pattern, and that was pretty much the end of it. The nice thing about that black crow pattern is it ended with a doji. We know dojis are signs of uncertainty, and we've been talking about this level now for about, I guess about a week and a half, about this level down here and how we're holding in here. The thing that I keep hearing about, and I do want to address this because it's really important for people to get this. I keep hearing about this head and shoulders, left shoulder, head, right shoulder. I have absolutely no idea if that's going to happen. And I'm going to just clue you in on a secret. Nobody knows if that's going to happen. Okay? They don't. All we can do is set up so that we trade what actually happens and make money off of that. So the goal is to have a game plan for what happens, not for what you think is going to happen. That's why you need to be prepared. It's very distinct. I don't know that this turns into a head and shoulders. Some people are like, no, it already negated the head and shoulders. I don't know that either. We could easily get right to this level and reject. What I do know is that this level is significant to me. And if I rejected a level of significance, then I want to act accordingly on that level. I hope that makes sense. I do read everybody's comments. And to be very clear, this channel is geared towards people that want to trade and learn. And there are going to be position flips. You're going to go, I'm going to be real clear about this. I'm going to go long NVIDIA, I'm going to go long Meta, and then 3 or 4 days later, if the market changes, I'm changing with the market. Okay, I don't have an ego with this. You know, I have one. I'm aware of it, but you have to trade what is in front of you. I can't be any clearer about that. If you don't, you're going to get the same results as everybody else, and everybody else is average. And you're not putting this kind of time in to be average. 44.81 was the first level that we were trying to flip. You got right to that 22.55, and you got locked right in there. See that level right there? So that was one of our core levels. Now what we're going to do is we're going to leave these in. We're going to go to just a plain screen. We all saw this already. I'm sure that the RSI is above 50. We're not going to spend that much time on it. We kind of drilled that in on Saturday. I'll link Saturday's video at the end. For those that are new, welcome. Make sure that you just reminded that all these videos are connected, starting with Saturday's video and just rolling into the week. It makes it a lot easier to follow for people. And then we just go through the events and talk about it and didn't get prepared for the next day. And then we do a pre-market live in the morning. So you can see your level right here, and you can see that rejection on the daily. Here we go. Let's drill into this on the hourly and blow this up and get involved. Now there's a couple key things that we're going to notice here. Number one, this level right here, this 44.81, take that level, draw it across. And we know exactly what this is. This is when Jerome Powell spoke, peaked the market up, got everybody involved. The first sign that this was going to happen, we started talking about this, if you'll remember. We started talking that this was going to, or had the potential to happen, where you had a low here and then you didn't make your first lower low. This was one of the key reasons that we talked about this, is because every single time before that speech and after that speech, we made a new low, and we didn't that day. And you could see from when we cracked, everybody remembers July 27th. That's the day that Japan came out and said that they're going to raise their interest rates. Equity markets have never been higher. Bonds markets never been higher. We did a whole piece on this 3 weeks ago. So now you can see lower low, lower low, lower low, lower low. I'll stop saying it. Higher low, right? Oh, I'm sorry. Lower high, lower high, lower high, lower high, and then boom. And we talked about this level and how we could stop there. Okay, see what these levels look like? This is why multiple time frames. Look at multiple time frames. So we know where these levels are. We knew back here when we did these videos about a month ago, if you go back and look at these videos, we talked about this break, this retest right in here on August 2nd, rally, and then cracked. And when people say, well, is that a head and shoulders? Yeah, this was a head and shoulders, and this head and shoulders cracked. And what that allowed us to do was have a game plan when it cracked and know to start putting on bear ETFs, which is what we did, and have a short position. And that allowed us to know that because we were mapped out, not because we knew it was a head and shoulders and we knew it was going to crack. There is a significant difference in that statement. You might want to listen to it again if you're having trouble understanding what I'm trying to explain. I think I'm doing an okay job of it, but you're always welcome to comment below, good or bad. I do appreciate the comments, because even if it's bad, it at least lets me know that, hey, I have to look at it. Maybe I'm doing something I could be explaining a little bit better. But if you take a look at these levels, we try to get through, we can't. Then what do? Well, we have an issue, don't we? And we can see that issue. But now we're through. Now we know where major support is. It's not a question anymore. 43.6625 is major support, period. It's not a discussion. Minor support, we could say, is here. Has 44.81 been tested? No, we just broke through and that was it, man. We never came back. You came to here, came to 4,500 and held, which is nice. You came to that level and held, but now we have to see 45.36. We have to see if that holds. And then we have to work our way up. But for now, 45.36 is our nemesis. After that, we have to get back to the neckline, which is roughly around that 45.60. We're all aware of that. So we have a bunch of stuff in here in this band that you can see that we have to pay attention to. You might want to just remember those levels. If we drill into NQ, and we're going to start on the hourly, it's basically like looking in a mirror to some extent. Very similar patterns. We never really got that head and shoulders up here, did we? I mean, you kind of got a deformed one, you got the same break, but not really. It really was never really that developed over here. But you still got your lower highs and your lower lows. Then you get your capitulation down, itchy speaks, and then we don't make a lower low. When that happens, then we make a higher high. So let's just understand what we're looking at here so that we get this. Here, you have a low, then you have a higher low, then you have a high, then you have a higher high. Well, that's interesting. Maybe we're seeing something a little different there. Do you see why you want to look at both indexes? What are we seeing different here? Breaks, retest here, and then rallies. Breaks, retest, then rallies. Now, I want to point out this distinction for a moment. The Nasdaq tried to get through, pulls back, tests that level, and then goes. S&P never did. That's a really important distinction. So this leads me to believe that the Nasdaq has more support at this level than the S&P does. Some people would argue, well, we're so strong in the S&P, we couldn't even get to it. You want to test a level. You want to make sure that you have a level there and that it's worthy. That's how I look at the world. Something to think about. I would rather have this than what I just showed you on the ES, and that's why I compared it. Again, we keep hearing about that they're going to call a top. If you didn't call the bottom, you don't call the top. We're above the 55 and you made a higher high. That's as good as it's going to get for us, guys. That's a confirm move. That does not mean it lasts, but if you're a trader, you now have confirmation on the Nasdaq when you're over the 55 on futures and you made a higher high and you closed. That's a confirm move, period. And there's really no other way to say that. Doesn't mean that you're not going to backfill, retest it, or retest anything in here, but you have to assume that this is the trend now, that the trend is going back. You remember from Saturday's video, we said trend, counter trend, and we didn't know if the counter trend was going to turn into the trend or not. It's kind of telling us it's not. And you'll remember this from Saturday, but we should probably just do it real quick. Everyone keeps talking about, is this a head and shoulders on the ES and of course then the Nasdaq? And the argument that I made is this the mother of all cup and handles? Now, there's an argument to be made here as people keep telling us that NVIDIA is a fad. Is it a $1 trillion company that keeps doubling its earnings and revenue by billions and billions of dollars every quarter? Newsflash, it's not a fad. Anyway, you see what's going on right here? You have a cup and handle. You have a solid cup and handle there. And I think you need to understand that that is a possibility. And another thing that you have to understand is a possibility, and I am going to spend a little time here because I do think there's some differences. I did a video on candlesticks. I would watch it. 1, 2, 3 down, solid inside bar. We had to make a decision. We talked about this on Monday. We talked about it on Tuesday. And I said, we're not really there yet because it's only Tuesday. But you already have an outside week. Now, unless you're going to get a bearish engulfing pattern, right? How in the world are you going lower? So let me tell you how we're going to go lower on this so that you know what to look for. But before we do that, I just want to point out something. Now, I do read your comments, and one of the big comments was to follow up. The number one thing we were looking for on the weekly chart for the Nasdaq this week was rate of change. We are back over the zero line as of now. If we stay stagnant and go nowhere, we are now positive on rate of change. Does this mean that we will never break this again? No, but it means that this is what we have now, and all I can do is trade what I have right now. I can only trade what's in front of me because you can predict as much as you want, but it's not going to work. Historically, it's not going to work. It's actually the worst thing that could happen for you, quite frankly, to you think that your predictions are how you're going to make money. But if you take a look at that level, there's your control bar. So you can see how this played out. This is a perfect cup, guys. This is your handle and you're setting up. If you flip the cup and handle, you get back into the trend, which is pretty much something that, or the channel, which is pretty much something nobody thinks is going to happen. Now, there's a couple things that could derail this, but before we even go down that rabbit hole, if we look at the S, we can get rid of the rate of change now, and we have been focused on this because it is stocks above the 200-day moving average, and we don't want it to break 50. It's not a coincidence where it stopped, and it went higher again today. That means about 10%, if you were at 50, and you go to 54, let's call it 55, make the math easy, that would mean that 10% of stocks this week, 50 names moved back above their 200-day moving average. Something to think about, and maybe a scan that somebody might want to run out there to find out what names were down below the 200 that are now above it that have upward lines. That might be something fun for somebody to do. So now we talk about the dollar, and we see the outside week on the dollar developing, don't we? We see the high on Monday, we see the crack, we see the rally, will level, and all we kept hearing about is the dollar is going to break out. The dollar does not look like it's going to break out to me. It looks like we're going to roll down. I'm not going to spend an inordinate amount of time on it. You can all see that. Okay, this is what we call just being taken to the woodshed. So if we take a look at the Qs, and you see how much the Qs have moved, and you realize that the VIX during that same period of time is down 14%. Okay, that's a pretty substantive move. This entire gain that everybody was talking about that we needed, we had to go to 20 so that we could stop going. We don't need to go to 20. We're going back down here to 12 and 13. That's where this is heading around. Okay, the idea, and we have to understand why this is happening. The idea that they had to raise rates 2 or 3 times was floating out there. That is becoming increasingly clear that that's not an accurate statement. Number one, we go through non-farm payrolls on employment. So what this is employment change by ADP. ADP only uses their data. They don't use anyone else's data. BLS uses everyone's data. ADP uses their data. Their average client has 30 employees. Very different than S&P 500. Keep that in mind. 195, they've revised a little higher, but 195, 177. Now we have the real one coming out shortly, and this usually is higher than that one. So this is leading people to believe that non-farm payrolls, the real one, is going to be weaker than expected, which is actually good for stocks. Why? Because it means they're not going to raise rates. Everyone's waiting for PCE tomorrow. We're going to get into it in a second. We already know that if core PCE prices that come out the day before, even though they give it 1 star, meaning that it's not that important, it is important, because if the consumer is not paying more in prices, then the PCE index year over year can't possibly be higher unless it's manipulated, and that's something else that we could do a whole episode on. But you're supposed to come in at 3.8, you came out at 3.7. No one's paying attention to this except for the people that know how to read this stuff and know how PCE is calculated. This goes back to where I talk about even your indicators. You have to understand how that stuff is calculated. When you understand what it's calculated and what it's truly measuring, then you know how to utilize it. So when everyone's waiting for PCE tomorrow, you know the probability already is that besides that you already have CPI, you already know that that's probably going to be in line to down, just by knowing that you should be paying attention to this. And it gives you a guide, not an exact level, but a guide. GDP 2.4 came in at 2.1. Price index, it is what it is. Sales are what they are. Just FYI, if you ever see red, that means they've revised the trade balance, or anything that's in red, that means they've revised it down, like they did JOLTS yesterday. They quietly dropped JOLTS, I think 400 it was, and then they quietly revised you up here. Something to think about. Now for tomorrow, we have continuing claims, jobless claims. Nobody cares unless you're over 300,000 for new claims. Other than that, no one's going to really care about it. Core PCE 0.2. Last time was 0.2. We just showed you where the prices were. It's very difficult for this to be an upside surprise with CPI coming in where it is, with that other data that I just showed you, okay? With the JOLTS job numbers. It's just not realistic. Could it happen? Yeah, and it's happened before. But unless you're coming in at 300 here on initial jobless claims, nobody cares. And then you're going to see PCE 3.3, 0.2. So we're waiting for this, and then we're also waiting for non-farm payrolls. What this data is doing is it's making people change their behavior. Between JOLTS, between the data you have today, between the data you're getting tomorrow, and non-farm payrolls on Friday, they are unwinding their puts on the equity market, and they are buying equities. And we talked about what area they are buying equities in. Now, here's XLC. We went over this yesterday, and you can see how all these videos are connected. And the one thing we said about XLC was you got below, down, and then over on the 50 on RSI. This is the 55, a 12, and a 22. That's what I use. You should use whatever you feel comfortable using. We talked about how this index was making a higher high. We don't really have a lot of these sectors, rather, making higher highs that are in this field. And then we talked about the names that are in this field that look the best. There's some we're going to talk about in a moment, but I think that we really need to focus on which ones are doing what they're supposed to be doing. So Netflix is doing what it's supposed to be doing. I had a bunch of other names I was trading today. I know some of the guys in the room and girls were actually trading this one, did quite well with it. This looks excellent. And if you come here and you realize that this is your first move above the 55, I would suggest that whether you use the 50 or 55, you use that as a demarcation line right now in your decision-making process. I think that you would find that to be of great value at this particular time in the market, something that you might want to consider. But you want to look for the ones that are above the 55. I don't think I could be clearer. You could start seeing how some of those are even breaking out, hitting new yearly highs. Very hard for names like Google to be hitting new year highs, and the market's supposed to go down. It's not realistic. Look at Apple getting above the 55. I'm waiting for 150. How's that going? Not very well. I can plan. I can set a level that I think we have the potential to get to, like here, all I want. Or I could trade and make money. Hopefully you're getting the difference. No one predicted that this was going to go to 170 and then bounce to 187 after it missed iPhone sales. Nobody, no one. So you have to trade what's actually happening when it happens. You will do significantly better if you do that. Now you can see you're above the 55. Should you be getting involved here? I think you have to see if you're going to have a follow through. If you follow through, you might just gap fill. You might gap fill here, but I don't think this quarter was that great, but we can do that this Saturday and really get into it. What's important is you understand the differentiation between names like Netflix and Google and then looking at Meta. Tried to get over today, and was absolutely complete, utter rejection. Now, can't get over the control bar. Doji sets up the pattern. Okay, you retest the level because dojis are what? Signs of uncertainty. Meta set up exactly as the S&P, can't get over. Rejection up here. What matters most? Where I am on the level or if I'm sloping? The slope matters. So you see the slope of that 22? The 12, I don't care that I'm above it, I'm sloping down. Okay, 55, I can't get above it. This is an issue. We need to resolve this. They need to get through these levels tomorrow. So you're going to want to watch this because if XLC pushes, then these names are going to start getting through. If we reject at the levels that we just went through on the ES and the Nasdaq, then these are your short candidates, just like Tesla, that just couldn't happen to get through that 55. I love when people ask me why I use a 55. I mean, I couldn't get any closer off of 55. I just couldn't get any closer to what actually happens. So it is what it is. But I use a 55. If you want to use a 50, go for it. You have this 1222 cross. I think that's great. You're touching the 55 for the first time. Since you broke it, I think that's great. You're still below it. So you have to keep that into account. You are still below it, and we have to watch that. TLRY exploded to the upside today. They're talking about changing the scheduling of the pot names, dropping scheduling from 3 to 1. I'm not totally familiar with this process. Every once in a while, you know, an election starts coming up, they start wheeling this out. We're going to do this, we're going to do that. I don't know if they're going to do it or not. You just don't know. It makes sense, quite frankly. You know, you have it legal in states, yet you're classifying it as heroin. It's kind of insanity when you really think about it. I don't know if you're going to have legs here. This is where I think you could have legs. And a couple people in the room were doing this today. I think this IIPR could have legs. So there's talk as well. One of the people in the room was telling me about it. It's not something that I'm up on because I don't really follow a lot of the policies that are going on in Congress. But there's something with the Safe Banking Act where they're talking about allowing these corporations to bank safely in the U.S., which they're not able to do. Right? You have to have these state banks. These people have to hire armed guards. It's absolute insanity. I like this chart a lot. I like the fact that they have about $70 in book value. And this chart was a monster. The biggest problem that they ran into was that people that they would lease their facilities to, because they would lease their facilities and then they would take a percentage of the lease. The problem that they ran into was people just wouldn't pay them. And if they didn't have to pay them, and then they would take them to court and they would say, well, it's illegal what I'm doing, therefore I don't. It was a whole thing, therefore I don't have to pay you. And they'd have to go to court to get the money. That's why this thing, one of the reasons why this thing got shellacked. So if they can start working that portion of it out, which I think they can, you've got a really interesting idea here. Now, after hours, CRM, look at this chart. It's fascinating. And they crushed, in my opinion. That's a solid quarter for a big company like that that's doing that kind of money. I know we all get spoiled with NVIDIA, but that's a big quarter. Look at this after hours, this high tight flag. Look at crowd after hours. Now, this didn't make any sense. They dropped it earlier, and now they're lifting it. One of the key things I tell people to do, especially traders, newer traders, if you're going to trade after hours, you always want to try and drop a anchored VWAP on the first bar and then just kind of see where all the players are. Because usually if you flip those levels, you know, and usually look where the conference call was. So the conference call is going well and you can see that level and how you flip there and then you can see the reaction. That's it.